Welcome to After 5 p.m. Lending in Life, where we clock out of mortgages at 5 p.m. and clock into family, life, and finances. Today we've got a great topic. We're going to focus on the art of the pre-approval.
Yeah, our format today on the podcast is going to be a little bit different. I know we've had interviews in the past. You and I have just had open dialogue. We want to approach this a little bit different on the art of the pre-approval, almost a little bit more of a training element. If you were to get in the minds of Ben and Shaun, how do we go about it? What's the process? What does it mean to us? So a little bit more of a training concept. So kind of jumping into it, this is meant to be a little bit of a shorter time frame of a podcast, quicker take. Shaun, jump into me. We hear in the industry a pre-approval and pre-qual. Sometimes they're used interchangeably. Help me understand what the difference is and why it's important.
Yeah, so it's funny because a pre-approval can mean so many things. You can click a button nowadays and get pre-approved, right? But what does that really mean? And I think technically in the loan industry, with expert loan officers, a pre-qual is a very basic verbal verification. Hey, I make X amount of money, income, assets, credit. I make X amount of money. I have this much in the bank. I can probably buy that house. And verbally, maybe you pull credit, maybe you don't, but that would be a pre-qualification. So very basic. You haven't verified anything. You haven't run any underwriting findings. It's super surface level. So for agents, that means, hey, there could be, they say they make $10,000 a month, but do they really? And is the $10,000 W-2? There's a whole bunch of things that could mean. So with the pre-approval, though, at least what we do and how we view an actual pre-approval is full income review, full assets review, and full credit review. And so we'll pull a credit report.
When you say full,
yes.
Can I interject there and say verify?
Yes. Yeah.
Right.
Yeah.
So when we say full income, it means we're not just saying, hey, I make a W-2 wage or a salary. It's like you're actually seeing the pay stub and calculating it.
100%. Yeah. And a lot of times you're even reaching out to the employer and verifying the income. Hey, I'm a truck driver. I make 50 cents a mile. I made $100,000 last year. Can I qualify? Like you need to go get all that info. And by a pre-approval, you're getting all that stuff up front, verifying all the ins and outs, looking at the bank statement. We can spend I'll spend hours sometimes on pre-approvals, just really digging deep to make sure it meets loan guidelines and really seeing if this person can get a loan.
Okay. So we can agree that not everyone's definition and expectations
100%
are the same on what a pre-approval is. I guess I want to share my perspective on the referral partners I work with. I think it's very, very important that we share what our interpretation of a pre-approval is with our referral partners so we can set them up for success. If they're expecting a pre-qual approach, it's a matter of, well, can't you just get on the phone with them and 15 minutes later you're done? You can send me a letter. Mm-hmm. Or what's going into it so they can understand the work. Now, the idea of doing the extra work, getting the income verified, pulling the credit report and running what is called the automated underwriting findings. Fannie Mae, Freddie Mac have their own systems. Without doing those steps, we're hopeful, right? Mm-hmm. And when we write a letter and our name goes on it, we want to know that we've done enough due diligence that we're not hopeful. We can with confidence say this is going to cross the finish line. Mm-hmm. We're going to get this thing closed. I just know, and I know I might be jumping out of order on some of these bullet points that we want to cover, but how do you handle a real estate agent that sends you, because we obviously like to operate in a strategic, planned approach rather than a chaotic emergency room triage situation where everything's hectic and we're being reactive. We want to be proactive. But when someone finds the house first before they contact you, and it's a multiple offer situation, so we got to get an offer in or we're going to miss out on the house, and the agent sends a borrower over to you that's complicated, that's not just a quick in and out, done in 30-minute pre-approval. How do you manage the expectation of both the borrower and the referral partner?
Yeah. So really good question. So you have to be strategic in realizing, hey, if we can't help this client within this short amount of time, or this agent, like they could miss out on this house, right? At the same time, your name's on that pre-approval. So if you say you can do it, and then you can't, then everyone loses. That's a lose-lose. So I just try and communicate like as clearly as possible. I try and get as much info. Obviously try and get them on the phone and get any amount of documentation I can, pull credit, check all the boxes for that full pre-approval I was saying. But letting them know, hey, there could be, A, B, and C could come up. Like, hey, I'm happy to write this pre-approval contingent on, these few things we still got to verify in order to get kind of, our name in the hat, so to speak. And I'm doing that with the agent too, of, hey, I've looked at everything. I've looked at what I've looked at. There's, these couple things that we need to explore further. We don't have the time to do it. But just so you're aware, are you comfortable with me writing a pre-approval, knowing that this could come back?
And this is a conversation you're having with the buyer's agent representing the borrower.
Yeah, I'm always as clear as possible to the agent so they know, hey, what risk am I taking with my buyer's earnest money too? How should I write the contract? Should I do a little longer financing and appraisal deadline? And so, we're working as a team together, but that way there's no surprises for them. If, a week later we get the written verification of employment back and it's, they're 100% commission and they just switched, when they said they were W-2.
Yeah.
So yeah, trying to set the proper expectations for them, and then letting the borrower know too, hey, we still have some things to explore, but I'm willing to write it this way. So even the sellers too know, hey, there's still a couple things that we haven't fully explored.
Okay. So what I'm hearing you say, if I'm summarizing it, is just over communicate. Hey, we didn't have enough runway to do a proper pre-approval and verify everything running it up the flagpole. Based off of the information I have now, here are the variables. Here are what's not, right?
Mm-hmm.
That's solid. And it should or shouldn't work out, but here's what I'm still missing to close the loop.
Yeah. I think that's, so in Utah, the pre-approval is there's really no forms or anything. In Arizona, I really like Arizona purchase contracts and their LSUs, because it shows everything you've done as a lender. It holds the lender. You got to
check it off, right?
Oh yeah. Yeah. And so, even if a seller's agent might get a pre-approval letter from you and it might say there's a couple things missing, I think they respect that even a little bit more. And if their offer's better, but hey, I just need a pay stub, it helps them make a better offer too. And then, I don't know, it just helps your reputation being as transparent and over communicating.
Yeah. One thing that I do with agents at time is I'll give them a percentage of confidence.
Okay. Yeah.
And I'll say, hey, I've done as much as I can. If you need this letter to put it in for this particular house that has a very short window of time, and I know that a verification of employment or a tax return that's, I have P&Ls, but I don't have a return to go off of yet. They're in the process of filing taxes. Whatever the scenario is, I will tell them, based off of my years of experience and the various case studies I've worked on, based off of the information I have right now, I am 90% confident in this pre-approval that we're going to get this deal done. Or 70, 60, 40. And the lower it gets, the more I get a response and opens up a really good dialogue with some of my referral partners is, oh, right? Like, they too don't want to put in an offer and get a house tied in a contract and then have to send the cancellation.
Mm-hmm. Yeah.
So at least it puts it in their court saying, do we want to push this? Are you comfortable pushing it? Or are you not? But I like that, giving a percentage, because that is a real quick, easy way to summarize the work the level of confidence based off of the facts.
Are you having that conversation with the buyer too and saying, hey, here's my percentage, or how does that look?
Yeah. Depending on how sophisticated the borrower is, how much detail I want to go into, I absolutely need to communicate with them just as I am the agent. But the details of that conversation can be vastly different between borrower and agent.
Sure.
So, because a lot of time the agent doesn't need to know certain details, client confidentiality there but they need to have enough information that they can make good decisions moving forward from their perspective, for their responsibilities.
Yeah. So. And then say you have a buyer that's really pushy, like how do you handle that with the agent?
If the buyer's being pushy more than the agent?
Yeah, say if the buyer's being pushy, hey, get my offer in, but they haven't sent you stuff.
Oh, I love that. Good cop, bad cop, right? You and the referral partner, the agent, you're on the same team.
Yeah.
So there's times that whether it's for the pre-approval or if it's after they've gone under contract and I need to get updated documents, updated pay stubs, bank statements. If I have a borrower that's dragging their feet, I will absolutely call the agent and say, hey, can I get a little helpful nudge? I've asked 2-3 times. I'm getting more assertive with every request. An extra ask from your side might motivate them a little differently. And they don't need to go into a whole lot of detail, but I'll have agents say, hey, did you get everything that Ben needed? I know he sent you some homework items. Absolutely get the agent involved to help motivate that. And we don't know what's going on in their lives, right? Is it because they're too busy? Is it, do they not understand the level of importance? And so sometimes it's just good to get it from a couple different angles, different touches that will motivate borrowers.
Yeah. Good point.
Most don't, right? We don't run into that terribly often.
No, but yeah, I was just curious on how you, handle that process.
So let me jump into here. In my mind, the items that need to be covered on an overview. I look at a mortgage file, and you can split it up into 2 pieces. One side of the file and all the paperwork and documentation is focused on the property, right? It has nothing to do with the consumer. It's the property, the appraisal, the title report, the flood certifications, insurance, blah, 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 blah. When someone is getting pre-approved, we really know nothing about the property, and we're not worrying about that side of the file at all. We are focusing on the consumer side of the file, credit package. I mean, you can call it a bunch of different names, but really it's 3 main categories, and that is credit, income, assets. Credit should be fairly easy. It's a matter of having enough data to pull a credit report, looking at what their monthly obligations are, credit scores, or their judgments. That process should be fairly easy. The second piece is probably the most difficult, and that is, what are we using for income? It has the most variables, and some are very cookie cutter, standard, base salary. Maybe it's just Social Security and pension income, ones that are very easy to analyze and come to a conclusion. And then there's others that are terribly complicated. Multiple businesses, rental properties,
pass-throughs.
Yeah, tons of variance there. And then the other is down payment. When you look at down payment, in my mind, and I say this to clients quite frequently, the larger the down payment, it's kind of like a hallway with a bunch of doors. The less money you have to put as a down payment, more doors close. There's less options, right? But the more money you have, the more doors open, different loan programs, better terms. But those are really the 3 categories that you're analyzing, and there's a unique relationship between credit and income. How much money's coming in versus what's committed to going out with your payments on the credit report. That was the relationship that lenders are looking for, and that is a debt to income. Each loan program may have different caps on what their debt to income ratio can be, but that's what a lender is looking for, and that's what they need to communicate with the real estate agent is, hey, this person qualifies for 500 with their debt to income, but they can actually go up to 550. Anything over 550, it puts them, too high, right? Their debt to income is out of reach. That debt to income is the one that you want to communicate with both the borrower as well as the referral partner.
And why is that so important?
I think it's good that real estate agents aren't sending properties that are outside of their ability to qualify, right? We don't want to be sending $1 million homes if they only qualify for $500,000.
Right.
We don't want to be sending them $400,000 when they can really go up to $800,000. Now the buyer may still only want to be in that lower price range. Sure. And that's a delicate balance, because sometimes I'll have clients that are like, I don't want the real estate agent to know that I can actually qualify for a higher amount.
Interesting.
And I think that's a very delicate balance that you gotta live sometimes, that line. Because I think it's important that maybe there is a house that's just outside of the range that they need to know you can actually reach out and qualify for it, or maybe it's a price drop. Maybe it's offering a lower sales price that gets somewhere in there. It's important to let the real estate agent know what tools they have to work with. So I'm curious. Talk to me about the pre-approval process from really lead acquisition, the moment you get that contact info, to the pre-approved. You're done. You're writing the letter. Walk me through that.
Yeah, the stamp of approval, right? Where everyone wants to be. Yeah, so when we take a lead, so I'm assuming these are mostly just purchase. Let's just say they're all looking to buy a house. So we'll get the lead in. Obviously we want to try and set up an appointment to kind of go through their goals, budget, what they're trying to accomplish, what does their investment future look like. We kind of take a financial what would you call that? Like a financial planning approach to them. Investing in real estate, owning real estate is a financial investment. And so we'll try and get that first initial call set up. We'll go through some basic info, and then from there we send out a list of documents we need. So depending on their type of income, W-2, tax returns, if they're self-employed, whatever they need, bank statements to cover those three things you mentioned: income, assets, credit. So once we get those in, we set up a discovery call from there, and then that's where now that we have kind of the basics, we can really get to know the client, dig deep into their goals, really find out, like, is their budget payment per month really what they want to own? Like, is that the same thing, or do they really want to own a bigger house or have a larger loan that might not be within their budget, And so that's always, especially right now with interest rates, it's always a fun kind of conversation to have, like, oh yeah, where do you want to be with your payment? And it's, hey, I want to be $2,000, but does $2,000 get them to the actual home that they want, right? And right now it's, sometimes farther off than what they would want to be at. But so we'll go through that, and then to pre-approved, once we have the documents back, we'll do full underwriting review, make sure we have that, and then we're communicating to the agent and to the buyer on, hey, here's kind of your parameters. I always like to keep the pre-approval kind of open-ended. So I don't ever want to say, hey, you can go to 500, and then they find a home at 500,000. The taxes are super high, and they're in an HOA, and now they don't qualify. So I always just want to communicate to the client and keep it open with the agent as, hey, if you find something, and we use Mortgage Coach, so that's that, home buying presentation and loan analysis software. We say we create that for them, and then when they find a house, hey, get back in touch. Then we'll know where rates are at that time of day. We can look at the actual scenario. We can pull in property taxes, homeowners insurance, and we can have almost, an exact idea of what your payment and financial picture will look like for this house. And so we'll update that for them. And then that way, before they're putting in the offer, they know what that financial obligation is going to look like for them. And then the agent knows too. And it's basically they get under contract and they're good to go.
Yeah.
So I think just with the pre-approval process, making sure, it's dialed in. We say your pre-approval letter is like your keys to your house. And then knowing, hey, like, what does that look like for the agent and then for the buyer?
Yeah. I like that. One thing that I do with clients is I kind of give them the analogy at being at the edge of the cliff looking down. When people are like, oh, how much do I qualify for? I clarify the question. You want to know the exact amount that you are on the edge of the cliff, that if you go a tiny bit higher, you're falling off the edge.
Yeah.
Right?
Yeah.
And I'll tell them, I would recommend, let me tell you that number, but you look for something slightly lower than that, so that we have a little bit of give, right? Maybe that's the interest rates going up. Maybe it's the taxes that you're talking about being a little higher. And if someone needs to be in that price point for whatever reason, that we have them send me the listing before they actually make the offer, so we can look all that information up, just like you said.
Yeah, it's super smart.
I think it's good to communicate that with agents too. Like, hey, on this one, we're on the edge of the cliff. We are squeezing out every penny of income to to get into this home. Like we have no room for error.
Yeah. There was a few times at the start of my career where it was a Monday morning, the buyer's out shopping, and I get this contract, and it's over the pre-approval budget. We told them it's an accepted contract, and then there's a $250 HOA, and the buyer doesn't qualify.
Yeah.
And it's just like that feeling is like the worst.
Yeah.
And so obviously on my end I didn't communicate something, or something fell apart, but it's like you got to get that dialed in, or else you're missing expectations.
Okay, let's talk about dialing that in. From the time frame that you get the initial conversation, right? You're on the phone with the lead that comes in, or the referral. How much time is typical from that getting the lead to actually writing the pre-approval?
Yeah, so I try and do it within 20 or 48 hours. So just if we have to do like a written VOE, I just want to set that expectation. It might take a day or two.
What's a written VOE?
Verification of employment. Yeah, sorry, there's all these mortgage, abbreviations. So that just shows the history of the borrower's income for that employer over usually we want to look at the most recent 2 years and year to date.
Yeah.
So,
So real quick, a benefit of using an experienced loan officer, you can make judgment calls, right? So sometimes you may get a written verification of employment, which, to go and expound on that, Shaun has a client that comes in, brings W-2s, pay stubs. He does a quick calculation off of the pay stub that he can see and recognize something has changed in the last year, because the numbers are not in line with what the W-2 was last year. Maybe they got a raise. Maybe there was a bonus. Maybe there's information there that you don't know. So to be prudent, you would send a verification over to the employer asking for a little bit more information. Gives a little bit more detailed breakdown of the pay over the last couple of years.
Mm-hmm.
But there's times that you don't need that, right?
Right.
You don't need that, because you get a pay stub and you say, oh yeah, well there's a whole bunch of commissions in here, but this person can qualify by just using the base salary, and we can show the year-to-dates make sense, and maybe you don't need to order the verification of employment.
Right.
An experienced loan officer can help speed through the pre-approval process based off of the volume of case studies they've worked with in the past to be able to make prudent judgment calls.
100%.
So I just wanted to give a little bit of backstory to that.
Yeah, and I think a lot of buyers and even realtors, just because they have a pre-approval letter doesn't mean they're getting the loan. So you might even go to somebody that you were referred to, and just because you're pre-approved, like the day of closing, the loan could get canceled, and it can stem back to this pre-approval. I think the pre-approval process is so underutilized, and the value of a solid pre-approval to an agent and to a buyer is, I think, worth more than, hey, maybe I save a little bit of money on a rate or something like that. Like having that technical analysis and that expert problem solver up front that knows the guidelines. I mean, there's thousands of pages of documents for loan guidelines, for conventional, FHA, USDA, VA. One little thing can kill your whole loan.
Derail. Yep.
And just because someone says they might be able to do it, doesn't mean that you're actually going to get that house once you get under contract. And so by going to the expert that knows how to do those things, like I said, we say, hey, it's like your keys to your new home. Like if I'm putting my name on that pre-approval, like we're getting it done, unless for that 1% chance, like something weird.
And maybe it's not
up.
getting done. It's saying, in my mind, what I'm hearing you say, Shaun, is you've done everything in your power. You've turned over every stone that you possibly could to identify future problems that could halt the deal.
Yeah.
Now there's things that are out of our control, and something that an analogy here is, in a flight, you have foreseen turbulence and unforeseen turbulence. Your job as a loan officer is identify all of the foreseen stuff that you possibly can, but you can't control if a client, and excuse me as I cough, a lingering cough with this head cold.
The kids got you sick.
let's see if we can do this again. There's foreseen turbulence and unforeseen turbulence. As a loan officer, it is your job to identify anything that is foreseen, anything that you could have done the extra due diligence and run things up the flagpole, verify, et cetera, but you can't control the unforeseen stuff, much like a pilot can't control a guy who has a heart attack mid-flight, but you have to trust his expertise that he's going to land that plane and have every one of his passengers as safe as possible. Mm-hmm. And you can't control when someone loses their job at the last minute, right? Or they do something that is out of your control that derails it.
Buys a Ford Raptor.
Yeah, that too.
Yeah.
Now you can communicate to them, don't take on any more debt, right? But I guess that's what I'm trying to say is as a loan officer, I truly believe that you should be doing all the extra due diligence, the extra legwork up front to make sure that when you write that pre-approval, you've done everything in your power to verify that that's a solid deal.
100%. Yeah.
Nothing in the gray.
No, and to your point too, you can almost in a way like forecast out, hey, in 30 or 60 days, there might be this thing that, say there's a large deposit. Hey, let's wait a little bit to make the process easier for the client and for the overall process. So you can almost kind of like
you're coaching them.
Yeah.
You're coaching them. And you're not coaching them to do anything wrong. You're coaching them, this is what you could do to make the transaction smoother. To eliminate turbulence that could make it a bumpy ride.
100%. Yeah.
So, awesome.
Ben, quick question for you. How are we doing on time?
We're good. We're at 33 minutes right now.
Okay. Just a couple more questions?
Yeah.
Okay. Which one? Is there one you want to talk about?
You can do the scripting right there.
Oh, yeah. That's the good one, right?
Mm-hmm.
That's the honey hole.
Well, honey hole is just, it's me.
It's Ben's claim to fame. Ben, so I learned to be a great loan officer from you because of the time you spend in building a great pre-approval and how to look at a great pre-approval. I would always come to you and, hey, like, can you help me, like, look at this deal? Like, how do we put it together? And you're always there to be a mentor and, hey, maybe let's try this. Always there and willing to help. Why is that pre-approval important to you? Because you've been 17 years now, 18 years doing loans.
Long enough that I'm still trying to figure out what I'm going to do when I grow up.
Yeah.
Maybe to answer that question, I think there's in my opinion, and I'm only sharing this as my opinion, there's two major pieces that a loan officer should be responsible for in the retail space that you and I operate in. And that is to generate the lead acquisition, the marketing, the sales side of it, and the other half is the actual originating piece, contract to close. And pre-approval is kind of on that contract to close side. It's getting into the trenches and the guidelines, the actual analysis of the client's information. There are a lot of loan officers that spend almost all of their time on the lead acquisition, and they bring in their lead and they drop it off at the office, and they hope that their processor or their loan officer assistant does a detailed pre-approval for them, and they're all off moving on to the next, trying to get the next lead or referral. Those are the ones that are taking agents golfing every Friday, 4 or 5 days a week, taking different referral partners to lunch. They're doing the wining and dining. And I will often go to lunch with an introduction to a real estate agent, and I'll tell them straight up, if you're looking for a guy who's going to co-sponsor with you on a Zillow ad, or you're expecting me to take you golfing frequently or consistent lunches, that's not who I am. I feel like the best marketing I can do for you and your clients is actually in the office doing really good pre-approvals. Because when I do a pre-approval, most of your work, at least time-wise, is getting a property under contract. A lot of the time, a transaction coordinator steps in and kind of helps with some of the other things to get it to the finish line. And when you hand me a contract, what you're really saying is, here's my paycheck. please make sure that I get it back in 30 days. The best thing that I can do is not get it just back in 30 days, get it back in 20 days. Make sure the pre-approvals are detailed and thorough enough that you're not running into problems and chaos and emergency room type of scenarios after it's under contract. So that's something I use quite frequently with my referral partners is when you send me a deal and I write that pre-approval letter, I want that to be as good as gold, that I'm there protecting paychecks by being a good originator, not on the golf course.
Yeah, that's crucial, and I think it stems too in knowing your value as a loan officer. Because yeah, you can go be that salesperson, and that's a different model. I'm not saying that that's right or wrong, but to your agents that you work with, the agent you're going to vibe with respects that, right?
Oh, I just get straight to the point. I think if you talk to anyone who's dated in their early 20s and now they're having to date again due to divorce or being widow or whatever, and they're dating in their late 40s and 50s, I think the dating scene's way different. You just get you're a little bit more direct and to the point earlier in the game. So I think that is really good, because if we're not in sync and in line with each other on what we're looking for in that referral partner lender relationship, it just helps you weed through things a little bit quicker, right? So I maybe it's bold. I don't mean to be bold and like in your face about it, but it's one of those, like, make sure you understand how I operate and what value I bring to the table. And if we mesh, great. Let's work together. And if we don't, that's okay too.
Well, yeah. And then from the agent's perspective too, it's, say they have a buyer and they know that, hey, if I send them to Ben and I know his pre-approval process is my paycheck or my keys to my house, to the buyer's house, like how confident are they in referring you, right?
Yeah.
Like there's power in them knowing and seeing you perform, and like, hey, it's like Ben gets it done.
Yeah.
Right. And so then when they're writing the offer too, I say, hey, if Ben said it, like it's going to happen.
Oh, and I think you've probably heard that. I have no specific example I want to use, but there are people that will see your name on a pre-approval letter, and if it was a multi-offer and the offers were the same, your reputation of getting things done and getting it on time and not asking for extensions and yada yada, will often persuade a listing agent to influence the seller to say, hey, in theory, these are exactly the same, but this one has a better reputation or maybe they don't know. Maybe they don't know it's some online lender that's maybe a rock star, but they don't know them by reputation. That I know on my end has helped me and my clients win a few deals by just reputation.
Yeah, same. But it goes back to just being an expert and then you delivering on what you said you were going to do. But you're also an expert at your craft too.
Yeah. All right. I think we already covered the one about getting a little bit of pressure to write a pre-approval letter that might be premature. Maybe we can kind of conclude the podcast by you going into some of the details of different tactics that have helped your pre-approval shine, especially in a multiple offer situation.
Yeah. Well, so on your example, just barely. So yeah, say there's the exact same price. There's 3 pieces of paper. They have 3 different logos and lenders' names on them. What's going to help influence the seller to choose that? Which ones, if they're all exact same timing, everything like that, how do you help your buyer win? And then how do you help that pre-approval stand out? So one thing I like to do is once the buyer's agent has sent the pre-approval letter, I'll say, hey, send me the listing agent's name and number, and I'm going to call them right after you send it. And so I'll call the listing agent and say, hey, so-and-so listing agent, we're representing the buyer on this property at whatever address. I just wanted to tell you about their offer if you have a minute. I just want to let you know how strong it is. And so then I'll go through, and obviously I'll only do this if I know, they're solid. But it's, hey, we've looked at pay stubs. We've looked at their tax returns. We've looked at their credit. We've ran AUS. Like this offer, like pretty much all we need is just an appraisal and title, And so that helps not only the listing agent hear from the actual person who wrote the letter that's going to stroke the check at the end, who's going to fund that loan, but it's also a human interaction too. And they can hear my voice and hear my confidence and really know, like I've gotten off the phone or towards the tail end of a call with the seller's agent or listing agent, sometimes like, oh yeah, hey, I really appreciate you calling. It means a lot to actually hear from the loan officer.
Well, I think what you're communicating in that, yes, you're advocating for the client, but what you're communicating is we're proactive. Mm-hmm. We are 2 steps ahead of everyone else, and you want a proactive lender in a transaction and not a reactive lender.
Yeah.
And so sometimes I don't think it matters what the outcome of that conversation is and how detailed you win and how really strong the client really is. But someone that's willing to pick up the phone and call rather than wait to be called upon, mm-hmm. Really sets the tone. It makes you stand out. I think that's great. So,
have you ever had a listing agent call you?
Oh yeah, and so I've done similar things that what you have done, and called, and a lot of time I'll just leave a voicemail. I don't always get them. It's an unknown number. Agents don't always answer, and I will. I'll just say, hey, I just wonder if I could provide any additional insight before you present this offer to the seller that might help you and them make the best decision for them and their family. Is there any information I can provide about the buyer that might help that seller navigate that conversation? I will have agents call me on occasion, and I'm surprised at how detailed some of them are. Mm-hmm. And others just want to know. They can tell within the first 30 seconds of the conversation.
Yeah.
How much do you know about the file?
Mm-hmm.
And so, yeah, I'll take those phone calls. The key to me is if you miss that phone call, you better be calling them back really quick.
Yeah. It's almost like an interview. For at least for me, I feel like sometimes of like, who is this person? Like, what are they about? Like, and then do they even know what they do? And I feel like a lot of more seasoned listing agents do that. To really vet out, like, is this legitimate? To go and be proactive, go out of their way, because they don't have to go call all the offers. Say they have 5 or 6 pre-approvals, but to really weed out and find the strength of which one's legitimate, like that is a huge value add. Yeah. To a seller.
And again, I think you have to be very careful with how much you say with the seller because of the client 100%. Confidentiality. I will use that same cliff analogy with the listing agent, and just highlight we are not on the edge of the cliff looking down. This person is so qualified that we got a lot of elbow room. We got a lot of elbow room in regards to debt to income, in regards to assets. These people are beyond solid, mm-hmm. and it's that type of macro level kind of update. But that's what they need to know. They just need that little bit of confidence when they put it in front of the seller to kind of help advocate. So I know this episode actually went a little bit longer than what we anticipated, but we wanted to kind of just, again, be a little bit more of a training episode, get into the mindset of Ben and Shaun regarding our approach to the pre-approval. Hope you found some value, whether you're a listing agent out there, give you ideas of maybe how to vet some of those offers coming in with pre-approval letters, and whether you're a buyer's agent or buyer yourself, make sure that loan officer that you're working with is doing the necessary work up front, not cutting corners, to make sure that pre-approval is rock solid. Ben and Shaun signing out.